So your money is finally behaving. The bills are paid, the rent is covered, and you even managed to save a little. Now what? Well, let's make that money grow. Think of saving like planting a seed, but if you want it to actually bloom into something beautiful, aka wealth, you've got to invest. Today we're going to talk about how to build wealth in Canada, specifically by investing in the stock market, and I will aim to break it down in a way that actually makes sense to you. No jargon, no finance bro vibes, just simple English. Okay, so let's get into it. The Newcomer's Guide to Canada is brought to you in partnership with one of my favorite apps, LemFi. Money transfer shouldn't be complicated, but we've all been there. Hidden fees eating up your hard-earned cash, waiting days for money to arrive. I don't know about you, but I really don't have time for that. But LemFi is changing the game. Transfers are sent within minutes from Canada, the US, and the UK to 10 African countries. There are no fees, great rates, and your money lands in minutes, not days. So here's a bonus for all of you. Use my code Reni and you will get $10 on your first transfer of $100 or more. Thank you, LemFi, for sponsoring this video. And now let's teach you all how to build wealth. I've been investing for 10 years at this point, so I think I know a 1-2 about investing. So if I were to be a newcomer in Canada right now, this is exactly what I would do. And let's even talk about why we need to invest. Let's be real. You cannot save your way to wealth. And why is that? It's because inflation exists. Every single year, your money loses a bit of its value because it's just sitting in a savings account. Remember, if inflation is going up by 5%, but your savings are at a 2% interest rate, you have lost money just by keeping your cash in a savings account. However, when you invest, your money is working for you. Even when you're sleeping, it is growing. So let's think of it like this. Saving protects your money, but investing grows your money. I love to show this example of two women who earn the exact same amount of money, who put the exact same amount away every single month, but they end up with two very different amounts at the end of the day. So let's break it down. We have Kayla and Kelsey. They both put away $500 every single month, but the difference is Kayla decides to invest her money every single month, while Kelsey decides to just save her money. At the end of this 40-year period, Kayla has ended up with $2.7 million. So I would ask yourself, would you rather be Kayla or would you rather be Kelsey in this situation? If you want to be a Kayla, that means you have to invest. So let's talk about your options. Because investing isn't just one thing, there are lots of different ways to invest. Here are some of the common ways that Canadians invest. First way, stock market. You can buy shares in companies and grow your wealth as they grow as well. You can also buy real estate. You buy rental properties and you build equity in those properties. As it appreciates, you can sell the house one day. Then there's cryptocurrency. This is something that's not for beginners. It's high risk and high reward. And we also have REITs, which are real estate investment trusts. That's a great way to invest in real estate without also having to buy a house. So for most newcomers, and where I would start if I were you, I would say the stock market is the easiest and most accessible place to start. You don't need thousands of dollars or even a finance background. You just need a phone, a plan, and some patience. And since you are following me on this YouTube channel, I feel like you have some interest in financial literacy. So this is exactly where you should be starting. When it comes to what you will be buying in the market, there are a few options. First one is stocks. This is ownership in a company like Apple, for example, and it's pretty risky, but it has high return potential. Then we have a less risky way to invest, which is ETFs or exchange traded funds. This is a basket of investments. Let's say you have Apple, Microsoft, Tesla, Nvidia, and a whole bunch of other companies, and you can buy them all at the same time in one fund. It's great for beginners, and this is where I would suggest that you start. We also have mutual funds, which are like ETFs, but they have very high fees. And then we have bonds and GICs, which are lower risk ways to invest, but with low risk comes low returns. Since you are all just starting out, I would say if you want to build wealth right now, ETFs are a great option because they are diversified, they're low cost, and you don't have to do too much research in order to purchase them, unlike what you have to do with crypto or buying stocks. I'll leave a link in my description box where you can learn about some ETFs that you can purchase. Now you know what you can buy, and now how do you actually start investing? The first thing you need is a brokerage account, which connects you to the stock market. So you have two main options. You can go self-directed or you can go managed. Self-directed means you can use a platform like Wealthsimple, like Questrade, like TD Direct Investing. Just open an account and that is how you will invest. And that means that you will buy and sell all the stocks by yourself. The other option is that you go manage. This is when somebody else is going to buy and sell stocks for you. So you answer a few questions and they will build a portfolio for you. This is great for beginners who want a hands-off approach, and there are slightly higher fees, but I would say it is super convenient. So if you are unsure where to begin, I would say start with a robo-advisor while you learn the ropes, and you can always switch to a self-directed platform a bit later. And here's where it gets a little bit better. So inside your investment platform that you've decided on, you need to have an account that you are investing in. So in Canada, we have multiple accounts, lots of different accounts. Remember in the last video when I said that you pay taxes on almost every single dollar that you make in this country? So the Canadian government realized this, so they decided to give us a certain amount of money that we can grow tax-free. So I'll discuss 3 of them today very quickly. The first one is the TFSA, which is a tax-free savings account. And here all your growth is tax-free, and it's a very flexible account. The second one that we have is the RRSP, which is the Registered Retirement Savings Plan, and your contributions here reduce your taxes, your income tax bill. But you will pay tax later when you withdraw your money during retirement. This is great for long-term saving if you plan to stay in Canada. And lastly, we have the FHSA, which is a new account that helps you to save for your first home. This is a great account. It combines the TFSA and RRSP, and I have a really detailed video that will give you the benefits and the pros and cons of each account. But again, this is a video for brand new people to Canada. So for the average newcomer, I believe you should open the TFSA because it offers you the most flexibility. The last step would just be to start researching your investments and purchasing them within your TFSA. Each of these accounts also have a limit of how much you can contribute to them as well. So just use a calculator. I'll link some in the description box to determine how much you can actually put into your account based on how long you've been in Canada. So again, if I were moving to Canada right now and I wanted to invest in the stock market, this is what I would do. 1, I would open my brokerage account. 2, I would open my TFSA within that account. 3, I would set up an automatic contribution so my money is going there every single time I get paid. And 4, I would buy some ETFs that track Canadian and US markets. That's it. If you do this, your money will grow, and it can even be done on autopilot if you decide to automate everything. So this is how wealth is built in Canada. I have built a $300,000 investment portfolio by following those exact tips that I gave you. So it is possible, but start small, stay consistent, and then use all the tools and accounts that are available to you. If you found this video helpful, I would love to know. If you have questions as well, I would also love to know. And I do have a detailed playlist on investing in the stock market, which goes into how to research which ETFs to buy, what diversification means, and all of that. So you can watch that playlist. I'll leave the link in my description box. Thank you so much for listening. I hope that you enjoyed this. Thank you so much to LemFi for sponsoring this video. And we have our last video in the LemFi series coming up next, and I will walk you through the process of buying your home in Canada step by step. So I'll see you in the next video. Thank you so much for listening. Bye.